On to our topic of the week here at Economic Outlook. Indonesia's economy continues to show a solid growth this year amid a strong consumer spending. But the global economic slowdown could affect the growth next year. Let's have a look at the full story. Indonesia's economic growth remains strong this year as consumer spending and investment continue to become the main drivers of the economic engine despite the fall in exports. Gross domestic product grew 4.94% annually in the July-September quarter, but it was lower than the 5.17% growth logged in the second quarter and short of the 5.05% of the market's consensus. However, the growth occurred in almost all expenditure components, except for the government expenditure and exports. The highest growth occurred in the consumer spending, which rose by 6.21%, followed by investment, which increased by 5.77%. Total exports declined by 12.34% to $92.27 billion year on year during January to September period. Of the total, non-oil and gas exports dropped by 12.89% to $180.48 billion. Statistics Indonesia's data has shown. Indonesia's economic growth climbed to 5.31% in 2022, its strongest in 9 years, but the growth momentum began slow in the third quarter. This year, as prices moderated and weaker global demand, high inflation and a rise in interest rates could pose a drag on activity this year. With the decline in the growth trend in the third quarter, the government has revised down the growth projection from this year to 5.04% from 5.1%, while for 2024, the growth is projected at 5.2%, slightly higher than the average 5% growth projected by international organizations. Finance Minister Sri Mulyani Indrawati says that the 5% growth projection is among the highest in the Southeast Asia and G22 countries despite the current global turmoil. One of the indicators that make a positive trend in Indonesia's economy is the expansive manufacturing sector activity, with a Manufacturing Purchasing Managers Index (PMI) of 51.5 in October 2023. Meanwhile, Bank Indonesia Governor Peri Warjio is optimistic that the Indonesian economy will grow in the range between 4.7% to 5.5% in 2024, before rising higher at a range between 4.8% and 5.6% in 2025. Economists widely expect Southeast Asia's largest economy to cool this year due to a slew of domestic interest rates hikes, falling commodity prices, and weakening global growth. In its latest Economic Outlook report, the Organization for Economic Cooperation and Development, or OECD, estimates that the global economy will slow down next year as a result of tightening monetary policies, weak trade, and lower business and consumer confidence. In the Outlook report, OECD projects global GDP growth at 2.9% in 2023, followed by a mild slowdown to 2.7% in 2024 and a slight improvement to 3% in 2025. Asia is expected to continue to account for the bulk of the global growth in 2024-2025, as it does in 2023. Despite the global uncertainties, Indonesia's macroeconomic indicators mostly remain positive. The inflation rate, for example, has been under control and within Bank Indonesia's target range of between 2 and 4%. The country's annual inflation rate increased to 2.56% in October 2023 from 19-month low of 2.28% in September. Meanwhile, rupiah has been weakening against the US dollars in recent months amid a rising concern on global uncertainties. In October 19, 2023, Indonesia's central bank unexpectedly raised its reference interest rate to 6% to defend rupiah, which has come under pressure amid US monetary tightening and rising geopolitical risk. Although some international organizations have estimated Indonesia's economy will slow below 5% in 2024, a number of economic observers are optimistic that the government's GDP growth target of 5.2% could still be. Indonesia's economy has outshined most other Asian countries in the last 2 years, but the prospect for this year could be less promising as the global slowdown could affect the country's economy. Now, our guest, Bapak David Sumual, Chief Economist at Bank Central Asia or BCA, has joined us here on Economic Outlook through Zoom. Hello, Bapak David.
Hello, morning. Aloisa,
morning, and thank you for being with us here through Zoom. Let's go ahead to our discussion, Pak David. Now, according to the latest IMF projections, the world economic growth will slow from 3.5% in 2022 to 3% this year, and then again to 2.9% in 2024, next year. And this is well below the historical average. Now, how do you think this will impact Indonesia's economy then?
Okay, Loisa, there will be some impact, of course, because global economic slowdown will impacting some sectors, especially manufacturing for sure. But I think demand for from China will remain stable, in terms of volume. So despite the volatile global commodity prices, foreign appetite for investments in Indonesia remains strong. Lately, we see that the FDI is still growing around 16.2% year on year. I think all-time high in third quarter 2023, the number around 13 billion. And also we have a very big domestic market, 56 to 60% of our economy being driven by the domestic economy. And we know next year we will have election. This kind of situations will also boost the consumer spending, especially. And also some other multilateral institutions also projecting, like IMF, World Bank, higher economic growth next year, around 5%. This year's, of course, because of this, the impact of global economic slowdown, the growth will be around 5% perhaps, because in the third quarter we only see 4.9% of economic growth. So we still believe that the next year's economic growth will be quite stable and also being boosted by the elections and also government spending. Government spending until the third quarter still remain not so significant, but I think in the fourth quarter there will be some boost from the government spending in the fourth quarter of 2023 too.
Pak David, it's good to see that you are still very positive on the outlook of economies in Indonesia next year. Now, as you mentioned just now, that we are actually looking at a downward trend of economic growth here in Indonesia. Do you think that the GDP growth target that we are aiming for next year, 5.02%, can still be achieved then, looking at our current condition now?
As I mentioned before, that we will have elections at least we have 3 rounds of elections next year. We have regional elections and also the presidential elections. And as we see the data in the previous elections, the money velocity actually higher during the elections. So I'm quite optimistic that next year's growth will be still around 5 to 5.2%. There will be, according to our calculation, around 0.2 to 0.3% additional growth from the elections itself. And as I mentioned, money velocity also will help. And there is a possibility that the commodity prices, after almost 1.5 years really weak, we also expect that there's kind of bottoming out, yeah, from the current prices. Yeah. So there will be some rebound in some commodity prices, and because of the restocking, yeah, from the China especially.
And of course, how the election will fold out and the result will largely impact on our economy next year. Now, if we can talk a bit about the global trade, the weakening of the country's economy, the third quarter was partly caused by the decline in exports. Pak David, how is the outlook of our global trade next year?
Yeah, as I mentioned before, for Indonesia, we are a commodity exporting countries. We look carefully what happened in the commodity prices, of course, and we still see that there will be some rebound. The demand from China, I think, will rebound because of in the past 1.5 years they keep what we call it, quote unquote, dumping their products, yeah, all over the world, and they need to restock right now, yeah. And to restock, of course, they need energy, they need commodities, and they need many materials, of course, yeah, to import from many countries, including Indonesia. So I think there is a chance of rebound, and we also see that the global central banks, including Fed, will not be as aggressive as this year or last year in increasing or in maintaining their tight monetary policy. So there is a chance of recovery also after very tight monetary condition in the past 2 years. Yeah. So there is a chance also that there is a recovery also in the global trade next year.
Now, let's talk more about the Indonesian currency rupiah now. Most Asian currency, including rupiah, have been under selling pressure this year as U.S. Federal Reserve maintains a hawkish rhetoric. With the easing of the inflation in the U.S., do you think that the Fed will begin cutting rate next year? And if that does happen, how is the prospect of the rupiah?
Right now, if we see in the Fed fund futures market, there is a chance that the Fed will reduce the rate by around 50 basis point next year, and they will start it around mid of next year. But this is a probability in accordance to the Fed fund futures. And also we see the projection from the Federal Open Market Committee. They also expect cut of 50 basis point next year. Yeah. And of course, the expectations of Fed rate will impact the expectations of rupiah exchange rate. Yeah. So far, we believe that the exchange rates will be more stable compared to this year because the expectations of lower inflation, yeah, next year. Yeah. So. But of course, we still see the geopolitical situation as one of the risks that we have to watch carefully. What happened in the Middle East will impact the oil prices, of course, and we see very close correlation, yeah, very tight correlation between oil prices and the dollar index, yeah. So if the dollar index and also the fuel prices in an increasing trend, of course, it will impact the emerging market currency, including Indonesia's rupiah. Yeah. So that's the one of the risks that we have to be a concern of Indonesia next year. Yeah.
Pak David, you mentioned just now about the election. Now, unlike exports, if you can talk a bit about investment realization have rose by 18% during January until September this year. Do you think that the election will affect foreign investment flows in Indonesia?
Yeah, elections can have varying effects, yeah, on investment flows. Yeah. Perhaps elections may lead a temporary pause or a cautious approach among investors due to the uncertainty. This also happens in 2014 during the transition period, yeah, because there is a change of regime from Yudhoyono's presidency to President Jokowi. So they need the certainty, of course. But This happened in the first round of election in 2014, and I think that kind of pattern can also happen right now, yeah. But after in the second round, for example, I think there is a possibility of rebound in capital expenditure, yeah, as we have seen in 2014 also. Uh, in the past few quarters, in the past couple of quarters, actually, we see a corporate investment appear to slow down, yeah. But I think because their revenue is still very strong, and also in terms of profit margin also really strong, I think there will be a recovery. Yeah, in my expectation that in the second round of election next year we will see stronger capital expenditure and investment, as well as also the foreign direct investment. I think because their horizon is longer, like 5, 10, 20 years ahead, I think it's not been disturbed by the elections, yeah, next year for the foreign direct investment. Yeah.
Well, it's good to hear that we are remaining positive for Indonesia's economic outlook next year. Bapak David Sumual, Chief Economist at Bank Central Asia, thank you so much for joining us here on Economic Outlook today.
Thank you, Lucy. Thank you for inviting me. Thank you.
Thank you.